Hey everybody, welcome back. So we have a lot to go over. We have to talk about some of the pillars and how they're cracking here. I do need to go through something with smart money, dumb money, so you're aware of it tomorrow. There is a very specific setup that the majority of retail traders are getting cracked on. I need to walk you through that so it doesn't happen to you tomorrow. So let's just jump right into it. So again, technical analysis is so beautiful after the fact, isn't it? But you can see the lower highs that are going on here and how we keep testing this level over and over again. And if we knock on a door long enough, what happens? The door will open. We just might not like what we get. So here we are. We can finally broke right in here. I think a test into this area down to 52 is pretty likely. And I always love your comments. I got one yesterday about the halvening, and it made me want to talk about Bitcoin even before we get into the S&P here, and I'll tell you why. Nobody doesn't know about the halving about this time. Everybody knows. So if everybody knows something, we have no edge, okay? We have no edge. So, and also all it does is make it harder for the miners to make any money, right? So it's not like all of a sudden you're going to get more and more price because of the halving because your thing's worth more money, okay? Like it's not. People need to wrap their head around this. The driver is going to be the ETF, and the ETFs are going to be the supply and demand. And now they're just completely manipulated by BlackRock, right? And we all know this, so let's just call it what it is. So when we're seeing this start to break here, we have to pay attention to it. Now let's get into the ES, okay? And let's take these off for now. But what we need to focus on is we just need to look at the basics of charting. Okay, I'm not going to go through all the charting right now, like all the rate of change. We're going to really get into it on Saturday and hammer this home and how bad some of this stuff is actually starting to get. But we must focus on the basics. And what is that? Well, it's just simple stuff, guys. All we're doing is just looking at what exactly is happening. What's going on there? We have the 12 pointing down. We have a 1222 cross. Okay, we broke the 55. Okay, so we can see exactly how this is playing out, right? It should not be shocking to anyone, but there are some things we need to go over here. So I'm going to bring it out. I'm bringing out the stool. And the reason for this is because I want people to get this. We had drivers. I went through this in yesterday's video. I'm going to link this video, but please listen to what I'm saying. This is the stock market for those that first time that are seeing the stool. Welcome. All these videos are linked together. What you need to do is understand you have macro data. Macro data could be like, are they going to cut rates? Are they not going to cut rates? Okay. Are they going to raise rates? Are they going to cut rates? What's going on geopolitically? Okay. This is the who. Fundamentals. Did ASML beat earnings? Did ASML miss earnings? Are earnings getting better or earnings getting worse? Okay. That's a fundamental driver of not only the index, but the sector and the stock, right? And then technicals are technicals. Okay. This makes up the market. If I'm sitting on a stool, right? Made myself laugh. But if I'm sitting on a stool and someone kicks out the macro leg, kicks out the fundamental leg, and kicks out the technical leg, I'm no longer sitting at the bar. I'm sitting on the floor. Right? So this is how you have to understand. Like, we don't have the macro driver anymore because we're losing that battle on the 10-year. We all say it. Fundamentals are not rocking and rolling here, guys. We lost it on the XLY names, right? With Nike, Lulu, all those names. And now ASML we're going to go through it. It was not ideal. We have Taiwan Semi tonight. Maybe we can get this fundamental leg back on our feet. And technically we have issues, right? I mean, I know I have issues, but technically we also have issues. So then if we go here and look at the ES, you have a 12, a 22, and a 55, and you cracked, period. That is a perfect 3-bar pattern. 1, 2, crack, right? I mean, the zero-dated put people are probably having field days right now with how easy this stuff is, right? I mean, we all see this stuff and how easy, you're just going to the same levels over and over and over again. That's all you're doing. I mean, that's all that's happening here. You're just getting to the level and you're rolling and it's over and over and over again. We can say it, right? So let's get to this now and say, okay, well, what does this mean for me and what are we going to do about it? You need to be aware of the setups that are going on and you need to understand something. It is not possible for the ES and the S&P 500 to go up without a driver. It just will not. Now, what does that mean? You need a sector to go up. If you don't have leadership, you have nothing. Right? So here's the ES, and we don't need anything more than me to show you that. If we look at the NQ, do you really need more than to understand that we've cracked right here? We really don't need more than that, right? But we're going to look at the underpinnings of the market. So we just kind of look and just draw this very simple trend line here, and someone could make the argument that's not it, this is it, right? And we could play that game. Either way, 6 1/2, you cracked. All right, so, I mean, RTY, why even bother going over it? We can all see the break, and we can see this very clearly, like this has issues, massive, massive issues. And we can all see that you try to get through, right? Complete Matumbo over and over and over again. For those that love those rising 3, falling 3 patterns, down, 1, 2, 3, up, down, like they are the candlestick patterns. I should really do another candlestick video. so that people can recognize some of these patterns. When you start to see them, they're so obvious, right? But anyway, so here we are. And now what is the catalyst for tomorrow? What do we possibly have, macro, fundamental, or technical, that could drive us higher? Well, we went through this. There's not a lot out there. There's some oversold conditions that could make us bounce, and we've gone through those, right? We have talked about those, and I'll just reiterate a couple of those again. I'm not going to do it all, but I will link yesterday's video to it. If we go out there and take a look, we talked about that bounce the other day, and we could see that, right? We talked about the 5-day being at, a 2 and we're due for a bounce. Well, we got our bounce, and now we're back to 16. Does it feel like it? For a lot of people, the answer is going to be no. But then you start looking at the 20-day, and again, this is stocks above the 20-day, and now that's at a 7 or an 8. Well, this is statistically where you get what? Another bounce at this level. If you go and mark these dates off and you go and look, you'll see that you will get a bounce from these particular times. You can look at those dates. I go over it in greater detail yesterday. But at the same time, the 50-day is way, way far off from its bounce level, which means anything with the 20 is probably short-lived. And don't even get me started on the 200. You haven't even begun, if this is going to get worse, to being grossly oversold. So short term, you're grossly oversold. But let's get back to the larger issue and look at the SPY. If you don't have leadership, you don't have anything. The SPY is driven by very specific sectors. So you're either driven by energy, and what I'm going to do is we're going to walk through this, and I'm just going to use the 55 so that you can see this. But what you have is energy, right? And that energy is completely cracked. Now, if energy is cracked, and then you look at XLF, and XLF is cracked, the financials, and now you're below the 55. Now, XLE is not below the 55, but that's a long way down to any support, right? So that's not actually in a leadership position here. So then you look at XLF. We don't have XLF. All right, so maybe they're just rotating into the defensive names. Nope. All right, well, maybe they're buying the staples. Nope, you're cracking there as well. Okay, well, maybe they're rolling into tech, right? Nope. All right, so you have zero leadership in the S&P 500. This is irrefutable. Whether you think we're going up or down, we have zero leadership. Zero. Let's talk about the Qs. What drives the Qs? We can see that we're below the 55 and we haven't been here for some time. Okay. All I want to talk about is what is happening, not what we want to happen, not what would make me feel warm and fuzzy, but what is actually happening. Okay. So let's just start with the basics. Well, we could look at XBI, and XBI is biotech, because we know that there's a ton of biotech in the NASDAQ. And then we would say, well, this is actually more sector, S&P sector, right? And it's more segregated. So let's go look at the one that's more linked to the NASDAQ. Okay. That would be this iShares ETF, more linked to the NASDAQ. Okay, well, that's a 55 declining and we're rolling over. Does that look like something that has support associated with it? Spoiler alert, no. So we don't have anything there. How about software names? No. Here's the 55 and it's pointing down. It's getting worse. It's not getting better. Here's the SOX. Guess what we broke today? The 55. Okay, so now there is literally no leadership in the NASDAQ and the S&P. So to go out there and fight the tape, which is what you're doing without, and let's go through it. You do not have the following. You do not have a macro driver at this time. Fundamentally, we need really good earnings. Maybe we'll get that with Netflix tomorrow night, and the XLC names could lead for a little bit. We could find some things in there. And technically, we have no leadership. So fundamental, right? Fundamentals, macro, technical, however you look at it, we don't have any leadership there. And we don't have any of these sectors that are leading. This becomes a very large problem for us. At the same time, we don't have anyone out there on the retail side, right, that is really buying. And we've seen this, right? We looked at smart money, dumb money. And then more recently, there was this study that was just issued on it where they're trying to have you look at it from a, let's say, a positive perspective. But from my perspective, I don't really view it as positive. I think it's negative, and I want to go through it so that you can see what I see. And then there's some really big data points that we have to go over so that you're prepared for tomorrow. Let's get to it. Now, I showed this yesterday, and it was to show smart money, dumb money. Now, the important thing about what we're going to see here is some studies that were done. So this is not how we refer to this as smart. We don't refer to this as dumb. We refer to smart as institutions and dumb as retail. All right. So before we get into that, we just want to cover that. That's how we view the world. Now, Sentiment Trader did this study. They're right here. I have no affiliation with them whatsoever, but I do like the fact that they do all this data and they do all the work, the legwork. And I've spoken to them before, and they are fine with me sharing it, probably because they get free advertising. But I have no affiliation with them whatsoever. And there they are. All right. So what they're looking at, they're saying that this is one of the longest times we've been under here in history. And you and I have been talking about that. And I say like you and I, like we're having a conversation. But you know what I mean? So you see that zero line right there? Okay. What does that mean? Well, you've crossed the zero line. Well, what is that? Well, to them, and I kind of agree with them, it's like crossing the Rubicon. So this is where both parties agree and are both bullish or bearish at the same sentiment at that level, right? So what we're going to do is we're going to see how does this play out later down the line. Now, they're going out there and saying, oh, this is really bullish for the market. I get a different opinion of this, and I've alluded to that yesterday, but let me show you how I'm going to use their data to kind of make you see what I'm saying and then why you should have some concerns out there. So again, this is Sentiment Trader, and this is their piece. It is not mine. It's right here. And this is one of the longest streaks ever that you have been in this position where you have had, dumb money greater than smart money. And you can kind of see how that's playing out here. It's one of the greatest times we've ever had. It's also one of the fastest closes we've ever had, which is kind of neat as well. And they show you for the past 3 years what's been going on. But you can see how this is happening. And there's the close. All right. So let's get into the fun stuff here because I just want to address it so that you can see how they're looking at it. So what they're doing is they're taking every single time that you were greater than or equal to zero, that zero line that I previously showed you, 63 days below zero. All right. So again, smart money, dumb money spread, how that's happened since they go back to 2000 here. Every single time that has happened, they take that data and they come up with 63 days greater than 63 days below zero. Now, what this is going to tell us is get that data and what tends to happen. So what does this mean for us? Well, we're going to go through a couple things here for statistical significance. The very first thing that we need to address, and it's important to get this out there and not wait till Saturday. I'm going to get more into this on Saturday's video, but this is important for people to get because I think people are going to try to catch a dip that's not there. And I'll go into what we're seeing already with this and how you could take advantage of it. But let me explain a couple of things here. 1 week later, okay, 2 weeks later, 1 month later, 2 months, you get it? So what they're saying is what's happened to the S&P over that period of time. And if you take all these and you add them together, you're going to get data. And so what you'll see is they're going to highlight, look, 3 to 6 months later, all right, you're going to get this. Now, a couple things about this. You have mean and you have median. I'm going to give you a real quick lesson in the difference if you don't know that, because there is a difference. One is taking all the numbers and adding them together and then dividing by those amount of numbers, and that is mean. The other is taking all the numbers and laying them out, okay, and then picking where the middle is, all right? That is median. All right, you want to focus on the mean, okay? Add them all up, divide them, get a number. So if you take a look here, and I want to focus on the mean. So if I'm here, they're saying a week later, you're up 0.2%. Okay, well, that's like a rounding error to me, right? And then if I look at the average max loss in this period of time, I get 1.6%. And then the average max gain is 1.1. All right, well, that's not really a ringing endorsement here that I have a 50% chance of a coin toss. And then if I lose, I'm going to be down 1.6%. And then the average gain is 1.1. Average them together and you get 0.2, right? And you add them together and it's literally a coin toss. And then you go out to 2 weeks and then you see the mean 2 weeks, 58% of the time, you're actually negative, right? So again, we're focused on the mean and you can look these definitions up yourself. So when I look at their data, it coincides with what I was saying the other day about if we drop, right, as we watch dumb money drop and we watch smart money go up, well, that tends to lead towards a negative S&P. Now, there's some other things here that obviously we've gone over, and we're going to go over some other things as well. But I think that that's really important to get. So, all right, so what else could happen? Well, the average max loss is negative 2.6, and the average max gain is 1.6. Well, that's not enjoyable. All right, so then I get out to a month, and you're at 67% chance that you're going to be up 0.3%. And for the opportunity of being up 0.3%, right? This is why it's so important to actually read the data and not just the headline, right? All right, so for the opportunity to be up 0.3%, the average max loss is 4.4%, right? So it doesn't really kick in till when? Till the first month, right? You got to get past the first 4 weeks. So this is, to me, what this is telling me is that the next 1 to 4 weeks, according to this one data point, please understand that, but it's a data point that I look at because it tells me what retail's doing. And we're already seeing signs of it. I'm going to tie this all together and show you what I mean by that. But retail right now is just taking it on the chin, and I'll show you how. But what you're seeing here are a couple things. It doesn't really get to where we want to have any interest in this till 2 months later. So we're 1 to 2 months out, but in the meantime, you could see 0.2, -2, 0.3, and then you get to a mean that's 2.6. Now, why is this important? Well, this is important for a couple of reasons. Let's clean all this off and show you where the rubber meets the road, metal meets the road. I don't know, one of those sayings. Something meets the road. All right, so what happens right in here? The average max loss, average max gain. See, when you understand what the data is, you can actually utilize it to make more informed decisions. So the average max loss, max gain, okay, now I'm back to a coin toss, right? I don't have any of this nonsense. This looks like a nightmare. So then what do we do here? Well, I've got a 75% chance that the max loss and the max gain are going to be the same. Oh, okay. And then from there, it starts going up, right? Oh, okay. All right. Now you have my attention. Good. Then the Z-score, I'm not going to get into it right now. But then you look at the mean. Within a month, you go from 0.3 to 2.6. Well, where's the meat of this? 4 weeks from now. 4 weeks from the date that hit the zero line. When did it hit the zero line? We just went through this, right? There's a reason why I'm showing it this now. We just hit the zero line. So that's why we're going over it now, right? So what this is telling us, 4 weeks out from now, May, maybe we can see something like this according to this one data point. So I hope you found that helpful. But let me show you what's happening to people, right? And you could see the difference here, the jump from here and then over, and then the 92, the 83, and you could see how the average gain is greater than the average loss. I mean, that seems like a better coin toss to me than what we're dealing with here, right? So just really important for me to get that out there. When you look at the data, you can make more informed decisions, but you always have to look at what you're dealing with. Now, if we look at ASML in these earnings and what happened and transpired, overall, they were not bad earnings. Let's clean this off. Apologies. But they were not bad earnings. They just were not the stellar earnings. And as we went over yesterday, we're losing everything on the stool, right? So we lost the macro, we're losing the technicals, and now we're losing the fundamental story. We're not beating and exceeding and raising guidance. We're going to come in the middle. Well, the middle's not going to do it. And so what they're doing is they're playing with us a little bit on the charts, and I'm going to show you that in a second. But this is a problem. This needs to pick up. Now we have Taiwan Semi tonight, so you're going to want to watch that tomorrow. Taiwan Semi already came out with their revenue projections last week, and they were good. And they show that they should have decent numbers, but they're going to have to talk about the future as well. Now, the last couple times we had an 8% move in here and a 4% move in here. But what I really want to focus on, so that we understand for tomorrow, that I think you'll find most helpful, is I want to focus on what I see happening in the market. So like one thing that we've done exceptionally well, besides staying out of the way, the bets that I'm making now, to me, are bets that I want to be involved in. For example, I actually thought ASML was going to have a pretty good quarter, and it had the exact opposite of a good quarter. Here, let me show you what I mean by this. Now, if we look at consolidated statements of operations, and obviously they are a foreign company, so that's why you're seeing it set up this way. All right, just FYI. Netherlands-based. I think they're the largest company in the Netherlands, actually. But what we're seeing here is pretty simple. So we're not going to compare sequentially because you really have to compare year over year because of the products they sell are enormous and you only have so many people, right, that are going to buy these products. All right. So here's the lithography system sold was 100. Look at the amount sold here. All right. So this was tried to be explained on the conference call and it did not go over extremely well. And we're going to talk about that. But this was a surprise. This was definitely a surprise. If you look at some of the estimates on the street, it was not predicted to be that great. But there's some things here that certainly missed. So if we take a look right here, and again, I thought that they were going to have really good earnings, and I thought they were going to ramp up, but it's a cyclical business, and I'm not going to spend too much time on it, but we'll get a better picture tomorrow, 100%, when we see Taiwan Semi. Taiwan Semi does this. It's going to be a real problem. It's already a problem. But what we're seeing here and what they're pointing out is that this is just Goldman's research, and what they're using is visible alpha consensus data. And what they're showing is, okay, this was their estimate, and they actually came in better than expected. They beat consensus, right? And then you kind of look at percent of revenue of gross margins. Well, they were at 48.9. You came in at 48.9. You came in at 51, and the consensus was at 48.9. So they're doing okay there. So overall, there were some things here that were pretty decent versus where consensus was versus how they came in. The real issue came in on the revenue side. And that was kind of an issue where they're saying, okay, well, this actual number versus consensus. So this rev was down, and that became the issue, right? They found something to make the issue. And what that's telling you is that you're priced to perfection. Now, why are you priced to perfection? We went over this yesterday with the 10-year. I'll link the video at the end with the risk-free rate and where the 10-year is right now and how that's affecting the S&P. That's why it's so methodical when you're selling down, right? When you look at the S&P and how we cracked, the move down is so methodical, right? Everyone can obviously see how methodical this move is. If you come here and just put this on a 5-minute chart, drop it onto a bear, and then just like a plain chart, I mean, you can say it. You came right to what? You came right to this level, same level we were at, hits, rejects, again, rejects. So you're hitting the same level over and over again. That's all you did this morning. I mean, if you put this on a 1-minute chart, and I know the zero dated option guys love this stuff, but you can just see pretty clearly you hit it, reject, break those lows. That's it. It's game on. You know, for them, all they're doing, if you're doing the zero dated option stuff, you're hitting, and then it's on. If you take the high out, they close it. If not, they make, they do well. So you can see that pretty statistically down. Where did you stop dropping? 1 o'clock. What happened at 1 o'clock? You had the 20-year bond auction, right? That's why it's so important. If you're playing the zero dated option game, you always want to watch where, the bond market is. And it's the same exact thing that happened here. I'm going to get right back on track here in a moment. But you can see that, right? This is right around that 1 o'clock level, 2 o'clock actually. Hold on one second. Let me show you where we started dropping. Here's 1. And then you can see that right there, rallies, can't break, and then just get the rest of the day. But it's really important to watch those, especially, it's really very important to watch those because here, watch the break. Like once you broke here at right around that 1 o'clock time, what happened? That was it. And then the S&P just went higher from there, right? And you can all see that at that 1 o'clock time. So you always want to watch that stuff. All right. So let's get back to it. So then you have ASML and we're priced to perfection. And that price to perfection was not what I wanted to see. I had a position in it and I gave it time. This was a major support level for me. And then I put a little alert here because I wanted to get back in it. I even tried once later in the day and frankly just didn't hold. But you can see, try to rally, and then as soon as I got this rejection, and now this is the kind of stuff that's super easy to trade because you have your major level, you hit it, you try to get over, you get a doji, you break the doji. I mean, there's your whole trade, right? That's telling you the whole story right there. It's very easy trade. If you wanted to short it, I didn't. I didn't know how far down we would actually go, but this was the last pillars we were just talking about. But I think it's really important to understand that. All right, so what does this have to do with anything? A couple things. First and foremost, this is what they're doing to people. And it's really important that you understand this so that you make sure that if it does happen to you, you understand it. This is my 4,000 levels on the video. I was in and out of it all day today. It's a great trading vehicle again. You just might not like, being short it or long it right now. And again, that's what you should be doing here, trading, because you're fighting the trend, right? The index is down, the sector's down, the stocks are down. I mean, they're all starting to break 55s. The Nvidia's not. But all right, so here's the 5-minute. You see how you broke out here? This is what I want you to take away. So what I'll do for the sake of this, I'm going to clean off my 1,000 levels, and I just want you to get this. So what they're doing is stuff like this. See that right there? All right, then take this. And I'm seeing this a lot. I actually started commenting on it on Twitter. You're seeing this a lot, and they're doing it on purpose, right? And this is when you have to understand that the game has changed. This is when understanding like the stool and understanding macro and fundamentals and understanding that, hey, they have to reprice these assets based upon the risk-free rate and the 10-year blah, 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 because they're not going to cut rates, and earnings are not going to make us grow into this right now, at least not by today's data. Taiwan Semi, let's see what happens, okay? But right now, this is the hand that we're dealt, and all we can do is trade what's in front of you. So I'm going to show you what's working for me and what's not working for me. So if I break out here, anyone would look at that and go, oh, I'm going to get involved right there. They're going to look at that. They're going to look at the volume spike. They're going to look at any metric that they can, right? They're going to look at their 9. Oh, my 9's over. They're going to get all giddy. Oh, I made the higher high, right? They're all excited. They go check the volume. Okay, and then all of a sudden they look at this. Okay, I got the spike over the 50 right on the RSI. I got everything. Now, someone's going to find some indicator that they specially use that would have told them to stay out of it. But okay, there's no need to even comment on it. But what they're doing here is they're triggering you, right? So that you will get involved, so that you become what? Exit liquidity. And this is what you have to start understanding. You don't want to be exit liquidity. You want to use exit liquidity. All right. So I actually got involved here across the board. As soon as it broke right here and it couldn't push and I got one bar, that was it. Boom, I'm out. So buying into it, breaks, hit, and that's it. You need to be ruthless with your stops. I hear a lot of people will reach out to me and in the communities, the newer people, the people that have been around know better, but they will say like, oh, I'm just going to widen my stops. That is the worst thing that you can do here. Absolute worst thing you can do is widen your stops right now. Okay? If you want to stay in it, you get out of the way and then you re-enter. But let me show you this so that you understand where I'm going with this. It's not just in those charts. I'm seeing this all over social media, and this is something that I'm short. We've been short. I think that this has a lot of pain left, quite frankly. Left, head, right. A lot of guys were looking at this thing and going, oh, I'm going to buy this. It's breaking. It's getting that higher high. Do you see the same pattern just in a different time frame, right? Do you see it? Let me show you this so that you get it. So, and comment below if you find this helpful, but you're getting hammered here. I guarantee you that retail that's watching this right now is getting hammered. Even the newer people that are coming into the room, the community right now, I'm talking to them and they're like, hey, I'm getting hammered. And the answer is get out of the way until you learn. Left, head, right. Okay. But you don't know that, right? I mean, isn't technical analysis beautiful? Like after the fact, it's so easy, isn't it? Oh, it's a head and shoulders. Yeah. What was it? What was it Thursday? It was a breakout. All right. So here you are, you're breaking out, right? You got to be careful here, guys, of this stuff now. You got to be super careful. Okay. If you see it on retail, meaning if it's on Twitter and all these gurus are tweeting the same name over and over again, it's not their fault, right? They're not doing it on purpose, but they don't know that if dumb money, the thing I just showed you, see how it's all tied together? If dumb money is selling, okay, that is retail. Who do you think is going to let it hold that up? You think institutions are going to hold that up if they want it cheaper? No, they're going to get out of the way and they're going to let retail feed on its own. You're going to be exit liquidity, and that's exactly what happened. Another perfect one, and I actually had a long on this today because of the follow through. It was beautiful follow through, and I just got out. What happened here on SMCI? One day, and everyone's like, oh, I got to get in. How'd that work out for those that didn't trade it, right? You have to get out. Here, take a look at this. You have to get out when the getting's good because clearly we're going higher, right? Because we have the wick right here. And then we're sitting right there, and wicks are what? Price rejection. And then we're going to flip the doji, and then we're going to go. And what do? They give you that higher high. And then what happens after that higher high? All right. What happens if you get involved, and then what do? They rug pull. And that's the problem that you're dealing with right now. They'll do the rug pull. So you're going to have tighter stops, not wider stops. Your stop is that doji. So I bought this, sold into this, waited for the doji. As soon as that doji happened, just bought the 5, right? And then waited for the doji there. And then boom, that's it. All right, I'm out of the rest. Next. Okay, so that's how fast you need to be right now. Okay, that's the kind of market that you're in. And you have to be aware of that. Also, another one, you have to start understanding who the players are that are in the market. Like people will look at ARM and not understand why it dropped. This was a very easy short. You've known for a very long period of time, that you have a massive seller out there, right? This is volume by price. Anybody can use volume by price, okay? So volume by price is very simple to use, and I'll show you how to use it. You go over here, you click on projection, right? And you go to anchored volume profile, and you click on it. After you click on it, you pick the time and the spot, and so you're going to want this earnings area, and then it's going to drop a line. Point of control. Point of control is where people own the most stock. It's not the average. Okay, the average is going to be anchored VWAP. To get anchored VWAP from here, all you have to do is click the button that says Anchored VWAP and then go to that special bar that you want and then click it. See the difference in price between the two? Okay, one is going to give you the average of all of this. Point of control is going to give you the price where everybody owns the most. They are two very specific numbers and they are very different. Very important to realize that. Point of control, to me, is more important. Hence, it's called point of control. But some people will use VWAP. It doesn't matter. Use what you're comfortable with. But this is how you would use that, and you would use that through TradingView. So understand that. So this point of control, once it's broken, it's broken. But you know that you have a guy out there from SoftBank that owns a ton of stock. And so what we did was understand this. And so when things started to note that they were getting bad, we bought puts. And I didn't need to get the best price. All I needed to do was wait till I started to see the volume come in. It wasn't about getting the best price here, right? So all we're doing is just waiting to see the size come in. And once you start seeing the size come in, you know it's game on. So does this have more behind it? You tell me. Look at what's going on here right now, right? So now you're watching this and you're watching this volume by price. Where are we? Like what's in here? There's nothing here. So this can get really ugly really fast. But if you utilize the tools that I just went through here, it should keep you out of harm's way and set you up for success with some of these trades and volatility as we've seen, let this thing sort itself out. That's it.